presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate your growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. Thanks so much for tuning in, kicking off your trading week right here with me, 3 p.m. Eastern Time. We got 53 minutes left to go in the trading day, and we're going to start it off with silver, folks. You got the S&Ps up by 44, but we jumped to silver, and yeah, is the bubble bursting? Well, time will tell. But you better be careful of a blow-off top like this, where silver's down $10 in literally a matter of minutes, hours if you'd like. Okay, but silver just dropped from 1 o'clock at 117.70. You're going to see the headlines everywhere, folks. All right, and rightfully so. Silver soars the most since 2008. Gold's above 5,000. They both hit it coming into today. 117.70 for an ounce of silver. Just like that, we're back at 108.27. As I was talking about in the top of the hour market update, tremendous volume. Okay, anytime you're getting this type of a movement. But absolutely tremendous volume, and we'll see if we can finish this up in the green. As in, we've given up, as I mentioned, almost $10. We're at 108.14 right now. Silver still up 6.7%, but $10 off the highs. Gold up $56, up 1.1%, 5,033. First time we hit 5,000, you open and you gap above it last night. Now we just traded. Okay, these are 15-minute bars. So from 2:45 to 3 o'clock, you just hit a low of 5,002. We're positive a bit, okay, but look at the bounce, look at the acceleration. You got a lot of volume to the downside, and folks, it's been a heck of a run. Protect yourself. Okay, I think we're going to have a great 2026 when it comes to metals. We have dollar weakness in tremendous fashion. I don't think that's going away anytime soon. The dollar hits a new recent low of 96.81. You check out the weekly, quite a move lower weekly last week. We're now challenging the lows we have from September as well as June out there. Those lows, 96.37 and 96.21. We just hit a low of 96.80. So remember those. We're breaking 96.37 and 96.21. And you back this up even further. This is looking like a decisive break of this area. And when you factor in the amount of rate cuts that are priced into this market, now we have a Fed week. With everything else going on, we have a Federal Reserve meeting 2 days from right now. About a 97% probability that Chairman Powell, that they do nothing, they stay where they are for the target range, 3.5 to 3.75%. Powell has 3 meetings left. Okay, his final meeting being in April. There's actually no meeting in May when there's a turnover. Next Fed chair, their first meeting in June. Market is pricing in the probability that we probably get no cuts from Powell. The amazing part is that by the time you get to the June meeting, okay, and let's just pull it up. Why not? The market is then pricing in just barely that we're going to get. One more, forgive me. Didn't mean to jump on it, but here we are. And when you jump to the June meeting, only a 47% plus a 13, but basically a 60-40 chance, even by the June meeting, that we get a cut. With that in mind, I think there's an opportunity for more cuts to come into this market that are currently priced in. You're going to see short-term yields under pressure. This is your 2-year right now. You're looking at a 2-year that's basically flat. And when you talk about curve steepening in terms of the Fed controlling that 2-year, you go up and down the yield curve. We're talking about a 2-year at 3.59 and a 10-year at 4.21. So about 62 basis points of steepening right now. The difference between the 2 and the 10-year. The 10-year is what's going to matter when it comes to mortgages and basically everything you're talking about for the economy. So as we get those cuts, and we have mortgage-backed securities being purchased, right, by Fannie and Freddie, and that's something the Fed could come into too. So with only 1 to 2 cuts, you're going to see rates under pressure. You're going to see a dollar that's going to be under pressure, as is the case today. All right, we're down almost a full point from where we were in the middle of the trading day on Friday. And yeah, I think that's going to be a wind coming in it. Gold's back. But boy, we got to breathe in this market. You take a look at the volume in gold, the acceleration up to the October highs. Okay, 1.9 million. This is on a weekly. Tremendous volume. Now, we've had nice acceleration, but nothing compared to how clean it was on that acceleration higher. You actually broke above. Watch this, right? Gold's high, 43.92. You originally broke above that Christmas week on no volume. Okay? You got to pull back on New Year's week, no volume. You trade back above the highs of October, again on relatively light volume when we had a full week of trading January 5th. And even on the last 2 weeks of acceleration, you're doing 1.3 and 1.3 million. While we did 1.3, 1.7, 1.9, and 1.9, and 1.4 on the October high. We're trading higher on lighter volume. Okay, so this market's going to breathe a little bit, and maybe this is the beginning of the breathing. Silver. Expect some continued volatility, but we have gone parabolic, folks. And when you go parabolic, extreme volatility coming down the line. Now, volume for silver is a different story. Okay, the volume is very clear on gold, but silver, with some of it going haywire, we trade higher. Now, I was talking about in the gold report I put out this morning. Okay, we got high volume the week of January 12th. We accelerated higher last week without volume. Just blew it away on much lighter volume. Last week, which is the week of January 19th, you did less volume than January 5th, and you did less volume than we were doing the week of December 29th, when we had a day off for New Year's Day. And then you look that on Christmas week, you did 500,000 contracts in 3.5 days. Remember, we got a half-day holiday before Christmas, and then we got a day off before it. Christmas was on a Thursday. So we technically had 3.5 trading days, and you did 500,000 contracts, versus doing 563,000 contracts last week in 5 trading days. So this market is pushing higher. That acceleration from about 90, which was the lows of last week, we're at 109 right now. Now, we'll see what happens this week. We're at 283,000 contracts so far for silver. You jump over to platinum. It's a metals-intensive kickoff to the program this afternoon, but rightfully so. Now, platinum, last time platinum had volume was 2,000. That's it. Now, we had some holiday trading in here. Okay, the week of Christmas, you did tremendous volume there as well, up to 2,500. You definitely did. Okay, you backed off, and that was New Year's. And then since then, though, this acceleration last week, lighter volume. That break above, lighter volume on platinum, period. Last week you did 156,000. You were doing 240, 216, and 195. We'll take a look at some of the mining equities, folks. We'll take a look at some equities in the market as well. S&P is up by 44. Gold at 5,000. Silver above 100. We'll come right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We jump over to the dollar yen. So you got some action in terms of yen strength, dollar weakness. That's your weekly. You jump over to the daily. You take a look at the move when we had on Friday. We had a rip-roaring pullback. There was a rate check from the Federal Reserve. We talked about it on this program. There's potentially going to be an intervention. That's what a rate check sometimes precedes. You have the yen starts off Friday near 159. We're at 153. Then we go to the shorter term time frame. A lot of that taking place overnight. You hit a low of 6 a.m., 153.297. We're at 153.96. So remember that you're talking about this is how many yen $1 buys, right? So when this number keeps going up, that's dollar strength and yen weakness, because $1 is buying you more yen. The dollar's becoming the stronger currency and the yen's becoming the weaker currency. $1 keeps buying you more and more yen because it's a stronger currency in that pair. $1 equals how many yen? In this case, now we're down to 154 from 159. So in the same way as we strengthen here, you could say, how many yen do you need to use to buy $1? Well, I was going to make somebody pay 160 yen, but now we'll only take 154 yen because it's a stronger yen. I don't need as many yen. I'm going to take 154. So that's how you view this when you're looking at the pair. The weakness is higher, and man, this yen is getting weak, and it's reached the level that they may be intervening. Okay, the last time they did this was 2024, and I think it was in April, but it could have been somewhere in this as well. I should look it up. Now, you jump over the dollar. Okay, because as you have the yen strengthening, you got dollar weakness, which ties in. You had a rip-roaring pullback on the yen acceleration from 98.40. On Friday, we're at 97.01. You hit 96.80. Now, we jump to the headline, okay? Dollar drops while gold tops 5,000. And yeah, with the Federal Reserve expected to pause the rate cuts, okay, the greenback slid on speculation the U.S. could coordinate intervention with Japan to support the yen. So there's a lot going on in this market. That's one of them, though, and you better believe it. And when the market reacts like that, folks, someone always knows something, okay? And it was quite an article reading that rate check deal over the weekend, over Friday, on Friday's program. You start to see, when you understand the semantics of a market like this, okay, and you have a Federal Reserve making inquiries ahead of a possible intervention for the yen, and then you get a move like we had where you're talking about a yen like that move. Now, that's your daily, okay? You take a look at the weekly, it was a dramatic move on a weekly. And you're talking about a technical area that's exactly where they've previously stepped into this market. So get ready for it, folks. And that, again, is going to strengthen the yen and weaken the dollar. And the dollar's breaking some pretty critical areas, and metals are reacting. But be careful in silver, folks. Okay, it doesn't mean we're not going to come back and test that high again. But eventually, it always goes further than you think it can, faster than you think it can. Remember that. Okay, don't think that you can just trade out of something when you're in a market like this that's going parabolic. And silver's got volume. Okay, but it's got volume at about $93 is the high there. And realistically, you closed it out at about $90. And that's where you have the next week going. We're at 108.31. Now, on a monthly basis, only 2 times on this chart have we done anything closely comparable to what we are experiencing right now, and both times they were followed by dramatic pullbacks. There's some wild stuff happening with the dollar right now, and I do not expect a pullback in silver, and we have volume. Okay, I don't expect a pullback anywhere near what we saw in the Hunt brothers, right, cornering the market in the 80s, and the pullback we had from the highs of almost $50 in 2011. So what we get to $12. I don't see it doing that. That would pull us back to 26 percentage-wise, right? You know, we go from almost $50 down to the lows of about $12, $13. But folks, we've gone parabolic. And we all know what going parabolic means. And when you look at these monthlies, that is what parabolic looks like. It's an accelerating curve to the upside. And usually, okay, especially in markets that are commodity driven, where you do have imbalances between futures, delivery, physical that's necessary, physical that you have to actually take delivery of and store, those markets can become dislodged, right? The flow of those markets has been dislodged, and it definitely has when you got silver going from, you know, $30 a year ago to 120, and the way that you've run up recently. Now you go back to a daily, and the volume's going to blow away everything today, and we are higher. But on a weekly basis, okay, we've given up almost $10 of that right now, and we're going to have tremendous volume. I would just pick a stop, folks. We're going to have plenty of action. I've laid out the case. I think we're going to have dollar weakness throughout the year. But silver's acting like it has no idea what price it wants to trade at right now when you can drop $10 in the matter of a heartbeat, essentially. Okay, and that's when we got the dollar. The dollar didn't move at all. Silver's its own beast right now. As in that $10 pullback, okay, yeah, we had some action, but nothing to the likes. You had gold pulling back, what, $80 in that move. We're already back to 5,042, right where we were at about 8:30 this morning, okay? So silver's its own beast right now, and on a longer-term basis, yeah, I don't think we're going back to $20, $30 even for a price of silver. But $80 to $90 is completely in the cards, and folks, that is in the cards, okay, over the next couple days. It's that quick when it goes like this. Now, you don't have to trade this. You can just have a little patience, or you can have the fastest fingers around. But if you go into an overnight session, you're not looking at your computer. You know, I saw silver, okay? I was out running errands in the middle of the day. I saw silver at 114, and I said, man, for the first time, I might do it. I might short silver. And about 2 minutes later, I look back, and it was in 107. That was it. And now, you know, you're back to 109. It still might be shortable, folks. But guess what? The other reason that I didn't pull the trade on shorting it is you could wake up tomorrow and silver could be at 150 as quickly as it could be at 85. I get it. But things are going a little wild on that type of a move. And it's as long as you're, you know, even a short, folks, okay? Silver's behaving erratically. That's the best word I can use. And on a longer term basis, yeah, you better believe there's some weakness in the dollar, there's strength in gold and silver. But you're talking about silver that's peaking up 15, 16, 17% when gold's up 1.5%, 2%, okay? This is not about just weakness in metals. You could store money in gold for value. Silver's on its own beast quest right now, and we'll see if we can get above it. But 117.70, and man, we're going to have volume at the highs. You jump over the VIX. You start the market lower territory last night with trading at 1596. And yeah, from the events over the weekend, it seems likely that we have another shutdown coming down the line. We'll see if they get a reprieve. But that is what's in the cards. That was the futures open last night. You saw it. And since then, though, we've had higher action. You had a brief pause in the overnight at 4:30, but it's been all upward action. And we take a look at the volume on these markets. Yeah. Not impressive, folks. Okay, look at the price spread and look at the volume. This is the S&Ps. You're doing 824,000 contracts. That's the least volume all year. And you got huge expansion. NASDAQ 100, same deal. Light volume on this move higher. Dicey action. You got silver, $10 off the highs, and we got markets higher, but not with volume. All right, folks, we'll come back. We're going to talk a little Tesla. They're talking about Tesla in the den. We'll check out some Tesla. We got S&Ps up by 43, silver at $108. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We jump over to Tesla. So we got quite a week of earnings coming up right now. we have this week, and it's a ton of companies overall, okay? But Wednesday, you get Microsoft, Meta, and Tesla after the bell, among many others, okay? IBM, Waste Management, Lending Club, ServiceNow, Lam Research, they've been on fire recently, but Microsoft, Meta, and Tesla Wednesday. And then you get Apple on Thursday. Now, those four companies alone make up almost 17% of the S&P. Do you hear that? Yeah, we're talking about Microsoft is almost 6%, Meta 2.4%, the 8th largest holding, Tesla 2.1%, the 9th largest, and Apple at 6.2%, the 2nd largest holding. 16.6% of the SPY. And as I mentioned, you get Microsoft, Meta, and Tesla on Wednesday, and then you get Apple on Thursday, among many other equities. So we jump over to Tesla. Now, on a weekly basis, that bounce last week, not impressive. Really, the volume since the highs on the pullback hasn't been impressive in the same way. We have nice volume at Tesla pushing 500. That was options expiration in December. There's your weekly. You jump over to the daily. Okay. You back it up, and there was your volatility that week. December 15th, when you traded 16th, 17th, 18th, 19th. 5 of the largest days you have on this chart, all in 1 week, and you push to highs. And it's that simple. Tesla's got volume at the highs, man. Now, fundamentally, I don't know how they're going to come into this valuation, and the story is what matters most sometimes on some of these earnings events. But that's your week. You got highs. You trade lower. Look at the trade lower. Tesla traded higher to 495 on 527 million shares. You break above this area with volume. You break above this area with volume as well. Pretty remarkable. Okay, now, you do have a high of 645 million from a year ago. You do it on 527. That's the one thing hanging out there. But we've pulled back on relatively light volume from those highs at 434. So Tesla's going to be out with their numbers Wednesday after the bell. I mentioned Microsoft. Quite a pullback from Microsoft. Let's just back this up for a second. One of the best performing equities from the tariff lows, we'll call it. And you just drove down to the 50%. So on a weekly basis, you trade higher. Yeah, but couldn't beat the volume of the prior week. We got a lot of selling in Microsoft from the week of October 27th. We got 8 straight weeks. You trade from October 27th of 553. You finally catch a bid at about 470. And that was the same options expiration December 15th. Now, some equities had massive days. Yeah. This is options expiration Friday. So it had a lot of volume that week, but it all came in on the options expiration. It's still real when it does matter in terms of that's how it came in. Take a look at Meta. Oof. Just all selling. Look at this. Meta pulls back from about 750 below 600, and since then, not much volume at all. There's no real strength here in Meta just yet. Boy, it'd be wild if we came back down and tested this low 500 after being at 800. You got a lot of selling out here in Meta. Very unconvincing buying. Even the acceleration on January 19th. Now, we had a short week last week. Okay, so that was 4 trading days on 73 million versus 5 trading days on 78. But doesn't really compare to the way that this thing ripped lower from 750 all the way down to 600. And then you jump over to Apple. Now, Apple's up 3% today. Yeah, not impressive volume at all. Look at the way this thing trades lower. 72 million shares, 80 million shares, 54 million shares. We're bouncing today on 35 million shares. Jump over to NVIDIA, the big dog. All right, we do have some selling January 20th. Let's put it on a weekly. Yeah, nothing really sticks out. This thing's just been chopping around. Pretty remarkable that we're talking about a 6-month consolidation near the price of 180. And that's what you really needed in this equity. I mean, this is where, if you just kept going higher, I mean, look at it. You've been at this equity. Yeah, we hit a price of 183 last July, and we're at 186. That's almost what you needed to make sure we don't go parabolic. Pretty remarkable when you take a look at the monthly volume, how much things have dropped off on this escalation. You also have splits in here as well. The video is looking like it's in a consolidation until it's not. All right, we take a look at some of the other equities with their earnings this week. You had Starbucks Wednesday before the bell. Got a nice bid recently. We're pushing above. That's your daily, January 21st. All right, that's some nice trading off the lows. January 5th, 12th, and 19th, the week of. For the last 3 weeks, you trade higher on decent volume. And what are we breaking above? We're coming right back into this July number. It's going to take a lot to get above this. Look at this volume. Yeah, right here. Hey, you break above this, the next stop's 117. So about 6 months ago, you traded from about 100, and that started the slide down to 78. The other remarkable thing is here you are, right at the highs after they announced the hire of their current CEO. So this is like the show me price, as in everything got priced in, and you're at $96. Now you got to prove it to trade higher. The market already knew there was optimism. And yeah, we gave up that optimism at the beginning of 2025, and we haven't gotten it back just yet. But the last 3 weeks, that's a nice trade. You break above here, and that'll show you strength. But man, we're going to need some volume, because that was a tremendous amount of selling. Everyone's been in a loser since then, and we're finally up to that area for Starbucks, and they got their numbers Wednesday before the bell. Yeah, these phone companies under pressure, man. Talked about it during the holidays. I mean, you just do the math, folks. Talked about it almost obsessively. I got a new phone. It's like a $1,600 Apple phone. A new tablet. It's a $600 tablet and a $500 watch. Like, yeah, $2,700 worth of Apple equipment, and paid nothing because the phone companies are in the subsidy business yet again. Verizon's the same deal, man. Now we got bad ticks all over this chart. We'll take a look at AT&T when we get back, folks. They're coming up with their earnings Wednesday before the bell as well. We got some selling here. Look at this AT&T. S&P's up by 45. We'll take a look at gold and silver as well. We'll come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Excuse me. Welcome back, folks. We take a look at AT&T. So AT&T, Wednesday, they'll be out with their numbers before the bell. You got a little volatility on the opening with the markets. And on a weekly basis, there's no sign of strength here at all, folks. We have some nice buy-in. Okay, the week of November 13th following the earnings disappointment, but it doesn't compare to the selling. And you got sustained selling coming December 1st, the week of December 8th. The week of December 15th, you got selling as well. The volume ramped up. We take 2 weeks off for the holidays, and the selling picks back up, and you go from a price tag of $24.75 down to $23.19. Okay, and last week's bid, not there. Be careful of these companies. It blew me away. Okay, the simple math of, imagine, $2,700 worth of items from Apple, and they lock me in on 2 to 3 years. I'm only paying like $120 a month, and that's including taxes, and they're going to have to pay that money back, a portion of it, a large portion of it, to Apple. It's just, and then you look at Apple, of course, the behemoth, the run up from April of 170 to 288, looking for a little bit on the more affordable side to the channel, but you are right in the middle of that channel line, and this is a channel. Amazing how time flies. The bottom part starts forming in the beginning of 2023, but look how many times you touch the top from the beginning. The highs of 2020, 2021, 2022, 2024, and 2025. Right there, we reject it again, and many times when you reject it, we're on our way back to the bottom part of that channel. Quite a monthly bar from Apple. Now, we got 5 trading days left. We've done about 770 and 924. See how it comes in. All right. Also going on this week, Lamb. Talk about. Reminds me of silver when I look at that chart. Now, quite the acceleration, of course, up to 223. You're up another 2.4% today. You take a look at the daily. It's a one-way trip, man. Those April lows, 56 to 236. So Lamb's out with their numbers Wednesday after the close. You're up by 2.4% today. It's been a heck of a run since 175. Look at all this volume, folks. So that's the daily. You're going to see it on the weekly. Look at this sustained volume. Okay, this is how you want to trade higher. That doesn't mean you might not, we might get a test back on lighter volume. But look at this acceleration. January 5th, you do 80 million shares. You do 71. 2 mammoth weeks. Okay, we got real strength up to about the 220 area. And we're sitting at 223. We pulled back from the highs last week on lighter volume. But I like how this chart looks. We got volume at the highs, man. You got strength on this move to 173. You got strength on the move up here to 190 yet again. So Lamb's out with their numbers. But anytime you're stepping into an equity, folks, that hasn't had a single pullback from 56 to 236, you better be aware of the inherent risk that a simple 382 pullback brings you back to 161. And realistically, we can push that even a little bit higher now. Yeah, 167, somewhere in that range, which would just be testing the highs of where we were December 18th, and it's been doing a one-way trip higher since April. So it's given up almost a month, but it's been a heck of a month. And that's where, folks, when you're trading, right? So we have strength in this equity. I like the volume. You know, if you're looking for an entry, look for a pullback on lighter volume. And we're coming into earnings. You got IBM out with their numbers. Now, this thing's been on fire. Look at this run. At one point, I had a channel on this. All right, look at this channel. Bud Rolf's the channel master. That was the break. You break above it in January of 24. We come back and test it, and that's the buy. Now, hindsight, of course, 2020, but guess what? This thing doubles in price since then. Okay, IBM. And there's the acceleration, man. This thing is real. Okay, longer term. There was your earnings. That was an earnings cycle ago. We've drifted lower over that earnings 90 days. But this thing's got volume all the way up there. Check it out. September, you did 34 million shares when you traded to 288. You blew past that area with volume on their October numbers. And all we've done is back off on lighter volume. You did have some selling, and that's going to be earnings. Yeah. There's your earnings day where we got a lot of volume come into the equities on the daily. So that's going to throw your volume into that number on December 15th. Yeah, look at we got a rip-roaring pullback the week of New Year's on very light volume, and last week's pullback on light volume is too. IBM looks good, man. Hey, of course it does. Look at this uptrend channel. Now we break out of that one. Okay. Let's see. You really got an area of support to the downside. Yeah, you got support from 3 months ago, and you got volume at the highs. 310. All right, and as I'm doing that, seeing a little volatility on Nike. There's a little volume come in. They're cutting 775 employees as they accelerate automation to U.S. distribution centers. That one just hitting the tape. Talk private credit. How about 100% loss on asset-backed loan deemed protected? Yeah, $170 million hit Apollo takes. Backed financing for Amazon brand aggregator Perch was wiped out. That was a $500 million commitment that Apollo and its insurance arm Athene made to credit facilities run by a company called Victory Park Capital. The firm held only indirect exposure to Perch through a layered structure that included additional protections not afforded to other lenders. Right? They got the extra protections. They lost it all. Yeah. Other investors, BlackRock, Oaktree, hundreds of millions of dollars in recent years betting on these e-commerce aggregators. So this has not been previously reported and underscores how asset-backed finance, long promoted as safe, can still be 100% loss. They were a senior asset-backed financing arrangement in 2021 that was immaterial to our performance. Well, it is immaterial, yet what happens if some of the other portions of their portfolio have the same thing? Seniority, diversification, and other protections, and recovery is estimated 50% higher. But guess what? The financial engineering going on has some risks. All right. And we'll tease this one as we come back. Yeah, some traders, hey, they're riding the momentum train, man, and can't blame you. So gold hits 5,100. Okay, and we'll talk a little bit of gold. We'll talk some April COMEX, and we'll talk some option trading volume on gold when we come back. Gold's $5,045. You jump over to silver, holding at 108.29. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We check back in on metals one more time. Silver up by 7.5% on the session. We hit $117.70, and we have tremendous volume. Now, the volume's trailed off a bit. You know, as things have calmed down a bit, the volume trailed off, but boy, you had some selling. Okay, you were talking about over, let's put it on a 15-minute basis, because tremendous volume. Almost 13,000 contracts in 15 minutes. Folks, for some context here, there's a lot of days you're doing 50,000 contracts if you go back before we started going haywire. 40,000, 50,000, okay? We just did 13,000 every 15 minutes. On a daily basis, you're approaching 300,000 contracts. That's more than a lot of weeks, even when we were trading higher. Okay, August, 269,000 contracts, right? 255, 272. Today alone, 295,000. So silver's trading higher with volume right now. A little bit bubblicious and parabolic. So keep those spikes up. Gold up $75, up 1.5%. Gold doesn't quite have that volume above this October high. The good thing about that is you're only talking about 4,400 in gold. But you are pushing above that area, and you're doing it on lighter volume, even though the last couple of weeks we've had some decent volume. Last week you do 1.3 million contracts. Big week of gold. And today you're getting a big start to the week as well. On a daily basis, that's going to be the most volume that we've traded, okay, since October, since those October highs on a daily basis. And it is Fed week, so we get a Federal Reserve decision on Wednesday. And yeah, about a 98% probability they're going to stay put. They are now essentially within the strike zone of neutral estimates, okay? And what, you know, we're at 3.5 to 3.75% right now. That big, beautiful bill that got passed, right? If you're promoting the big, beautiful bill pays for itself through growth, then we're around 3.5% for the overnight rate. So if we want to drop them, then maybe we're not getting that growth. They all tie together. The Fed's Wednesday, they are not cutting. S&P's up by 35. Thanks so much, folks. Have a great night. We'll see